The top business stories live from the Sky News City studio. Unlocking the economic potential of artificial intelligence. We hear from the new managing director of Google UK and Ireland in her first broadcast interview in the role. The online electricals retailer AO World returns to profit despite a drop in sales. And the world's top 1,000 banks are named. Find out which UK lenders made the cut. Good morning, this is Ian King Live, Business Life with Ian King. Before we get going, some breaking news that's reached us in the last couple of moments. The Competition and Markets Authority has just fined Leicester City Football Club up to £880,000. That's after it admitted anti-competitive arrangement with JD Sports. More on that as we get it. Now, the shift to artificial intelligence is one of the most profound technology changes of our lifetime and has the potential to deliver a boost worth £400 billion to the UK economy by the end of the decade. That's according to an economic impact report published today by Google. But it says that can only happen if the UK raises its research and development investment, builds greater computing capacity and enhances digital skills. I've been speaking with Debbie Weinstein. She's Google's UK and Ireland Managing Director in her first broadcast interview since she took the job. I began by asking how the company arrived at that £400 billion figure.
AI is the most profound technology that I think we're working on today. And it is not just a profound technology for technology, but also has a huge opportunity for the UK. You cited the £400 billion figure. That's the economic impact we think this can have by 2030. So actually growing the economy each year by 2.6%, which is a huge improvement in terms of the growth trajectory that the country is currently on.
For that to happen, though, the UK will need to invest more in research and development, invest more in skills. I mean, these are unfortunately things where the UK lags a lot of its peer economies.
We do think that R&D investment will be key. I think skills investment is also going to be critical. We actually just trained our 1 millionth learner in the UK around digital skills. And I think making sure everyone can participate in the advent of not just AI, but the overall digital skills transformation is going to be critical to realizing this opportunity.
Now, you also note that the UK will require more in computing power, as it were. Why do we lag other economies in this respect right now?
I think computing power are actually quite strong, and I think we need to continue our investment in this area. I think it is AI, certainly from a technical standpoint, requires a lot of compute power, so we'll need to remain rigorous in terms of our investment there.
But why is the UK behind some of its peers?
Currently, actually, the UK is in a pretty good spot in terms of our compute capacity, and I think the question is, can we keep pace and continue investing at that level? It's going to be critical for us to continue to have a leadership position in AI.
There's a big debate as to whether AI is going to create or destroy jobs. Are we framing the question in the right way?
I think jobs is a really important topic for us to be talking about. I do think there will be some jobs that are fundamentally transformed, and the majority of jobs will fundamentally change in terms of how they use AI in the work that they do every day. Personally, I'm using kind of autocorrect and all the techniques in Gmail to be faster and more productive in the work I do every single day. There will be jobs that are lost, but I think the bigger opportunity will be the next generation jobs that are created. And that's why we're so focused on the skills agenda, making sure everyone has the skills they need to succeed in this new wave of technologically abled growth.
Obviously, though, AI is going to render some tasks and some jobs obsolete. I mean, what sort of things should my kids be studying at school right now? What sort of careers should they be looking at if they're not going to get swept away by this technology?
Well, I think it's actually getting that balance right between having that kind of well-rounded education that helps you understand the possibility of technology, but the application to whatever you're passionate about. I think AI is fundamentally going to transform everything that we're working on today and make our lives better. And I think those that know how to use those tools, the AI-driven tools for innovation and creativity, are really going to be the ones that are going to succeed in the future.
What sort of things are you looking for in Google UK and Ireland now as regards new recruits?
Oh, well, we're always looking for great talent at Google, and we are fortunate to be a great employer here. We have actually 6,500 folks based in the UK across a variety of areas. So we have 50% of our staff are actually in technical roles, so product and engineering, and 50% of our staff are in sales and marketing, general administrative kind of roles. So there's a huge range of career options at Google here in the UK.
I mean, that's what really interests me about your career, because you started out as a banker at Goldman Sachs, you've set up your own business, you've worked at the likes of Viacom and Unilever. I mean, yours is not what you might call a traditional tech background.
Well, thank you for studying up on my background. That is true. I've had a diversity of experiences. I actually think diverse experiences make for an interesting career. And I think I've learned different things from each of those experiences that make me a better professional today. So certainly I would encourage your kids, as they're thinking of setting out on their journeys, to be less focused on the specific job, but more about the set of skills that they want to assemble from different experiences they might have.
Why do you think people are sceptical, though, about the transformative potential of AI? I mean, for example, Geoffrey Hinton, sometimes called the godfather of AI. I mean, he's just left a senior role at Google.
Yes, I think that AI, because it is such a profound technology, I think the opportunity for it to be incredibly powerful in solving some of society's biggest problems, climate change, health. We just launched a tool that helps you anticipate floods and the impact that can have in communities around the world. That's incredible. At the same time, we know that powerful technology, we need to be really responsible about how it's deployed. So at Google, we take this balanced approach to being both bold and responsible at the same time. We launched AI principles many years ago that actually govern the way we are deploying AI. And we're really rolling it out in a very measured, cautious way to make sure those benefits come forward, that £400 billion economic value for the UK that we see so available for us by 2030, but at the same time do it in a responsible way.
Now, the online electrical goods retailer AO World has returned to profit despite a drop in sales after removing costs from the business and closing its loss-making German business. Well, the company, in which Mike Ashley's Frasers Group has built a 22% stake, reported an operating profit of £13 million for the year to the end of March. That compared with a loss of £8 million during the previous 12 months. Well, joining me now is John Roberts. He's the founder and chief executive of AO World. John, good to see you this morning. One of the big changes you made during the last year, of course, was to introduce delivery charges. To what extent did that hit your sales volumes?
Yeah, so it did affect sales, Ian, in low single digits. And really, what we're delighted with that is the evidence that customers are delighted to pay for the quality of service that we deliver for them, because delivery isn't free. And so we look at it as an overall basket of the total amount that customers pay.
Which product lines have done best over the last 12 months and which have done not so well?
Well, so the most resilient area of our business is in the core major domestic appliance market. And so if you think about that as need over want, if you will, that if your fridge freezer breaks, then you're likely to need a new one rather than want a new one. And so most of what we sell is an essential item and doesn't sit in that discretionary piece. And so that's why the performance of the business through difficult economic times has been so solid.
The resilience of consumer spending has really taken a lot of people by surprise. Why do you think it has held up?
Well, I mean, if you look at employment data, clearly we've got macro challenges and households have got choices to make, but we still have very strong employment data. So it's people choosing again on those things of need versus want. And it's a pretty fast changing picture on the different things that households are having to deal with, whether that is, not so long ago it was energy, it's now moving to mortgage rates. So from our point of view within that, as the most trusted electrical retailer in the UK, it is just about us bringing those customers the best prices all the time, so that on those non-discretionary essential items, they get the best deals.
Obviously, 1.7 million households are going to come off their existing mortgage deals over the next 12 months. Does that concern you? Clearly, that's going to eat into their spending power.
Yeah, for sure. I mean, we're not going to be immune. There's no doubt about that. But one of the interesting trends that we are seeing actually is, particularly coming off the back of the energy crisis, is that actually as people are having to make those choices, as the household budgets get squeezed, they're making more considered medium-term decisions. So actually, one of the trends that we are seeing is that people are investing more on average product prices, so that they get a better product that's generally more energy efficient now, so it costs them less in the medium term. So there's some very interesting different dynamics that are coming as households get squeezed, where historically that might have caused households to trade down. What we're actually seeing now on a product value is that households are trading up.
Obviously, at the beginning of the last financial year, there were a lot of supply chain issues with which the entire industry was grappling. Are those really abated away now?
Yeah, as far as we're concerned, we consider COVID and all its impacts in terms of the supply chains pretty well entrenched. There's some things that are stuck and some things that have reverted back to the way that they were. But I think that's our responsibility to deal with on behalf of customers. All customers care about is that they get amazing choice and great prices when they get on the website, and the rest is for us to deal with.
And what are you seeing right now in terms of product price inflation?
We're not seeing a lot of product price inflation. As I say, the inflation is a consumer choice for customers to invest in a more expensive product that has a better energy rating that actually saves them money in the medium term, is what we're seeing.
All right, John, there's so much more I wanted to ask you, but we're out of time, I'm afraid. Thanks for spending the time today, though. It's good to see you.
Thanks, Dean.
Some other news stories for you now. And new car registrations in the UK jumped by 25.8% in June. That was the 11th consecutive month of growth. The Society of Motor Manufacturers and Traders says it's down to the resolution of supply chain issues and pent-up demand being met. Electric vehicle registrations rose by almost 40% and now make up 17.9% of the total market. The Financial Conduct Authority has confirmed for the first time it is investigating whether the hedge fund manager Crispin Odey is a fit and proper person to work in financial services. In a letter to the Treasury Select Committee, Nick Elrathi, the FCA chief executive, confirmed the regulator had launched an ongoing investigation into Mr Odey and his firm, Odey Asset Management, 2 years ago. Well, Mr Odey was ousted from the firm last month after the Financial Times reported on a number of allegations of sexual misconduct, which he denies. The vehicle rental group Red Northgate said this morning that demand was still outstripping supply as it reported record results. The company, whose importance in the white van rental market means it's seen as a barometer of small business activity, reported a pre-tax profit of £178.7 million for the year to the end of April. That was up 35% on the previous 12 months. Or Red Northgate, which employs more than 7,000 people and which operates a fleet of more than 130,000 owned and leased vehicles, said it continued to enjoy robust demand. The shares of the building materials supplier SIG fell by nearly 12% today after it warned that this year's profits would be at the lower end of market expectations. SIG, which used to be called Sheffield Insulation Group, said that sales for the first 6 months of the year had come in at £1.4 billion. That was unchanged on the same period last year. It said market conditions have been notably weaker in Poland and Ireland over the period as a whole, while it had seen a notable softening in demand in France and Germany during the last 2 months. Senior Chinese officials said today that the country's export controls on metals used in making semiconductors are just a start. Wei Zhangao, a former vice commerce minister, told the China Daily newspaper that countries should brace for more should they continue to pressure China. He was speaking after China's decision on Monday to place controls on exports of some gallium and germanium products, which are used to make chips and which are also used in the manufacturing of electric vehicles and fibre optic cables. Well, the move, timed to coincide with America's 4th of July celebrations, have pushed up prices as companies rush to secure supplies. Well, equity markets in the Asia-Pacific region suffered losses overnight following signs of a slowdown in China's services sector. Here you go, that's a picture, all of the main indices in negative territory. European equities have also traded to the downside this morning. That's a picture in continental Europe right now. Talking points this morning include Volvo Cars. The shares there up nearly 2% in Stockholm. That's after it reported a 33% rise in June car sales. Well, here in London, FTSE 100 also negative territory, currently off by 0.5% in a broad-based sell-off. Among leading blue-chip fallers right now is Legal & General. It's off some 2%. That's on news of a change in accounting rules which will clip profits this year by more than expected. Some of the big China-exposed stocks are also trading to the downside, most notably Prudential, off by nearly 2.75% right now. There aren't too many gainers to mention in the main index, but the educational publisher Pearson, the shares up there by just over 2.25% on positive broker comment. Outside the FTSE, the engineering contractor Keller Group is ahead by some 12% on a trading update right now, while the drinks group C&C, they're the people behind Tennent's Lager, they're up by nearly 2% after the fund manager Artemis raised its stake in the company. On the foreign exchange market, well, the pound has given up some of Tuesday's gains right now, although actually not really. It's more or less unchanged right now against both the dollar and the euro. Single currency not really much moved either against the greenback. The oil price has been on the move today, though it's slightly slipped after yesterday's strong gains. That's on demand concerns rearing their ugly head once again. A barrel of Brent crude right now will set you back $75.99 a barrel. That's off a third of 1%. Well, joining me now is Rachel Winter, partner at Killick & Co. Rachel, good to see you this morning. What's caught your eye in the markets today?
Probably illegal in general. So I know the shares are down this morning. That is because of a change in accounting rules that changes how they show their profits. But along with that update, there was a nice trading update that said how the rest of the business is doing. And they have experienced a very big increase in demand for annuities. So their annuities business is up 27% compared to last year. And I think that's really because of the attractiveness of annuity rates these days. So annuity rates, they tend to be based roughly around the 10-year gilt yield. In 2020, that went down to about 0.2%. Now it's up at 4.4%, so much more attractive, and therefore not surprising we're seeing an increase in demand for annuities.
Yeah, good value. I mean, obviously, Legal's Sir Nigel Wilson's about to step down as CEO after a very long stint there. Are you anticipating any major strategic changes from his successor?
Not at the moment. I don't think him stepping down is a big surprise, so I'd like to think they've got a good succession plan in place.
Yeah, Antonio Simoes, we've had him on the programme in the past, so hopefully see him before too long. What about some of these mid-250 statements? It's a fairly sort of active day in the mid-caps. There's a few things going on.
Yes, perhaps we could look at Numis. So this is an investment bank focusing on UK mid-caps. Bit of a pessimistic statement this morning. So they said there's been a real lack of mergers and acquisitions in the UK over the last year, as we know, but that will have impacted Numis's revenues. But it's a bit ironic because Numis itself is actually in the process of being taken over by Deutsche Bank.
Absolutely, and a deal that really did, it has to be said, catch people by surprise around here.
It did. I personally was very surprised, but the deal is scheduled to go through by the end of this year. And because that is scheduled to go through, we haven't seen much of a movement in Numis shares this morning, whereas otherwise I think we might have seen some weakness.
Yeah, did they say much about the pipeline? Because it was quite interesting looking at some of the other trading updates from their peers. I mean, Peel Hunt recently said they were beginning to see signs of life again in the market.
Numis, actually, I felt they implied the pipeline was quite weak. So they've suggested that people are still quite concerned about the macroeconomic outlook, and that's really damaging confidence and putting people off from going through with big deals.
Well, you mentioned the macro. We got the latest Purchasing Managers Index survey data for the services sector out this morning here in the UK. I mean, it's still growing, but growth appears to have slowed down. How worried should people be about that?
I don't think it's surprising. I think we have seen a big increase in wages, which perhaps has caused the services sector to slow a little bit. But the PMI number is still well above 50, and that means that people do believe the sector is expanding. So it's not all bad news.
Yeah, it was quite interesting listening to John Roberts from AO World there. I mean, he still sees plenty of optimism out there, plenty of resilience in consumer spending.
He does, and I think some of his comments had some quite positive read across for other sectors. So in particular, he said some things like shipping costs are really starting to normalise. So that should be a benefit to a number of other sectors.
All right, Rachel, got to leave it there. Always good to see you. Thanks for joining me. Still to come here on Business Live. The Banker magazine publishes its list of the world's top banks, but only one UK institution makes the top 10. Find out who it is.
We're about a month into the offensive now, and it's going okay. There's quite a lot of messages coming out from President Zelensky and others, just kind of, I think, counselling caution. It takes time, it's going okay, but it's not going fast, and nor should we expect it to be. The Ukrainians are trying to attack through very, very difficult Russian defences, and it's slow and costly progress. Well, I think what you're seeing is across the front, the very long frontage, the Ukrainian forces they're pressing, they're probing, they are making gains. Hanna Maliar, who's the Ukrainian deputy defence minister, said yesterday they took about 9 square kilometres the day before. I mean, that's a small amount of terrain, but it is forward movement. But I think what's actually going on is the thing you don't see, and that is kind of preparation in depth. So lots of, and we saw this last year as well, where the Ukrainians will be trying to prepare in depth. So they'll be trying to destroy Russian logistics, their command and control, which will make it easier for when they do break through. Well, the cost of human life, we've heard it from a number of people recently, just to manage our expectations. General Milley, the American chairman of the Joint Chiefs, said only a couple of days ago, this is costly warfare. And none of us should ever lose sight of that, when we're kind of looking on our Twitter feeds or whatever. The reality is for the soldiers on the front line, this is brutally difficult. I'm increasingly reminded of my own experiences in Mosul when we or the Iraqis liberated Mosul, and the offensive started with great fanfare in the world's gaze. But the reality is it takes a long time. It took 9 months for the Iraqis to liberate one city. And they did that with the world's or the West's air power and support. And of course, the Ukrainians don't have as much air power as they need.
Fly Emirates, fly better. Fly Emirates, fly better.
Welcome back. Now, HSBC remains the only European bank in the top 10 in the annual Top 1,000 World Banks ranking compiled by The Banker magazine. It's the 12th consecutive year that HSBC has been the only European lender in the top 10, which is topped by Industrial and Commercial Bank of China, and which also includes JP Morgan Chase, Bank of America and Citigroup. Well, of the UK banks, Barclays fell 3 places to 27th, Lloyds fell by 10 places to 52nd, Standard Chartered dropped 5 places to 56th, and NatWest fell by 8 spots to 61st. Well, joining me now is Joy McKnight. She's editor of The Banker. Joy, good to see you this morning. I mean, it really is striking that the rankings are just dominated at the top echelons by China and the US.
Yes, they just keep growing, and especially the Chinese banks. Of course, this year what we've seen across the top 1,000 World Banks ranking, which is ranked by Tier 1 capital, is across the aggregate. We've actually seen a bit of a contraction. So even the Chinese banks saw a bit of a fall. However, that was mostly due to the strong US dollar. So if the Chinese banks, if we looked at it and the ranking is in US dollars, but if we looked at it in won, in actual fact, the Chinese banks would have grown by about 8%. However, they fell by about 1%. But again, in terms of the double-digit growth that we've seen across the Chinese banks in recent years, this is a bit of a come down.
That's interesting. And just to Tier 1 capital there, that's the amount of capital that banks have to keep on their balance sheets.
Yeah, it's the core capital. So it looks at the total assets that the bank has, but then also it looks at how risky those assets are. And this is sort of the core. So if something goes wrong, the core capital is what's going to come in to help.
It's very interesting. If we'd been having this conversation 15 years ago, the UK lenders would have been far, far higher up the rankings. I mean, they're all rather diminished post the financial crisis, aren't they?
Yeah, that's true. But, every decade you sort of see a bit of a different change. So the bankers' ranking has been going since 1970. And at that point, the American banks were on top. And then it was the French banks in the 80s, the Japanese banks in the 90s, et cetera, and then the Americans. But the Chinese banks have dominated. ICBC, for example, has been in the top spot now for 11 years, so that's a record-breaking.
Well, at least you don't feel obliged, like the Sunday Times rich list, to come up with a new leader every year.
No.
Now, one thing that caught my eye is the fact that UK banks in aggregate have increased their employee numbers over the last 12 months. I think that will surprise people given the rate at which they've been closing branches.
Yeah, it's quite interesting, and that we saw that across the top 6 UK banks, that in actual fact the employees have actually grown by about 0.6%, which is not a lot, to be honest, but at the same time it does buck a trend. But across the past decade, you've seen a 23% decrease in employee numbers. So the longer trend is for a big decrease, actually.
Now, you've also compiled a listing of the biggest loss makers in the sector over the last 12 months. I mean, no surprise to see VTB of Russia at the top of the list, but there are quite a few challenger banks in there, the likes of Klarna Bank and Monzo and Metro Bank. Should people be worried about that?
I think it's interesting because, for example, Nubank and Monzo, it's the first time in the top 1,000. So they're building out their core capital, their tier one capital and things, but they're still seeing, as you say, the losses. So, yeah, I think we need to say that a lot of those banks are really focused on client acquisition, maybe prioritize that above profits, but obviously they want to turn that around in future.
No, obviously the UK lenders are in the firing line at the moment for not passing on the full extent of increases in bank rate to savers. But actually, you've come up with some evidence that actually their costs in paying depositors has risen quite sharply.
Well, what we see is that in actual fact, when you look at net interest income, it actually sees, obviously it's growing because interest rates are going up. So you see that growing. But in actual fact, when you look at income expenses, that's actually going up at a much higher rate. And so even though it's still dominant in terms of the net income interest rising, what we've seen is that these expenses, which is coming down to things like deposits, but then also when banks have to go into the market and actually get funding from the market. So those costs, are going up quite substantially.
That's fascinating. I mean, do you think they're going to ride out this current storm?
Yes, I think so. And again, the strong dollar also had an impact on the UK banks in general. So you just think to yourself, except for HSBC and Standard Chartered, which report in dollars, the pound depreciated against the US dollar by about 12% in 2022, which is the year that the ranking is based on, year-end results. And so, to be honest, they haven't done that badly in comparison when you put it into context.
All right, Joy, got to leave it there. Good to talk to you again.
Thanks so
you.
much, Ian.
That's it for me for now. I'll be back with the afternoon edition of Business Live at 4:30. Hope very much to see you then. In the meantime, do stay tuned after this short break. Jane Secker is coming up. It's obviously PMQs today, but there's no Rishi Sunak. He's at the NHS service. We'll have more on that after this short break. See you later. Cheerio. Great. Thank you very much.